All right, breaking news that's coming in right now on the Adani story. Fitch Ratings has said that there's no immediate impact on the ratings of the Fitch-rated Adani entities and their securities following a short seller report that alleged, of course, malpractices at India's Adani Group. We're referring to the Hindenburg report. So Fitch right now saying that there's no immediate impact on their rated Adani entities right now, and they're not expecting any material changes to the forecast cash flow as well. So Fitch saying no immediate impact to Adani. Of course, amid all of this gloom, this certainly comes as, in fact, some good news, a silver lining really for the Adani Group, that Fitch has said that there's no material changes to cash flow that's expected. Anand Adhikari, Managing Editor of Business Today magazine, is joining us on this broadcast. Anand, good afternoon. Fitch here saying no immediate impact on rated Adani entities for now. Do you see that changing really in the coming days, seeing all the reactions that are coming in globally?
So then a big concern, today in the minds of investor, is the resources. I mean, how the ability of Adani Group, to raise resources for their expansion plan. Yep. Adani has big plans, in the airport, road, data center, green hydrogen, green energy, FMCG. And today, what we are seeing in the market, people had very high expectation. The kind of price to earning, Adani Group was enjoying in the stock market was, 500 times, 600 times, which normally for any other company is like 50 to 60. So here, Adani was getting some 500, 600 times PE because people or investors had a lot of expectation, from the Adani Group. But if you look at their financial, Adani is a very profitable company. They have assets, they have hard assets like road, airport, and all their companies are very profitable. But what has changed, if you ask me, is their ability, to raise resources through equity. Number one, their ability, to raise resources through debt. I don't know, tomorrow when they'll go to the market to raise debt, I'm sure they have to pay a higher risk premium. Similarly, equity we have seen the FPO. I mean, it almost collapsed. So option to raise money through equity earlier, since it was enjoying a very high PE, there was very less equity dilution. When they were raising this 20,000 crore for Adani Enterprises, the equity dilution was, I think, less than 4%. But today, if you see their market price, I think equity dilution will be almost maybe 8 to 10%. But I don't see any, risk like what the Fitch has said, and I also agree with the Fitch rating. There's a lot of questions people are raising about the the bank loan and all, but the entire exposure is just 2.1 lakh crore, which is less than 2% of the entire banking system. So I don't see any systemic risk for the banking system.